Google will be your friend.
But the IRS website has it all there.
Yeah, that's
all the years.
yeah,
They're all there.
Yeah, so that's one thing I will tell you guys. So we're going to start chapter 4, but we are going to do some review. That's one thing I'll tell you guys. Many times there will be things, I know I was mentioning to you guys, even in the quizzes, they may word things differently than what we go over. And sometimes it may feel like they're picking out things that don't quite make sense or might not be something you think is important. I find that every year. And I think it's just, I was telling them earlier, I think it's because some of the companies they get to do the testing don't do taxes. So they may pick out something that sounds good to them, or, oh, that'd be a really good question, but really isn't something we can focus on. This chapter today, it's tips. They literally have like 10 slides on tips, and I'm like, I've not even had an issue with tips in 10 years. Like, this is just not something. One year in some of our trainings, they were focusing on ministers' returns, just like something they would get stuck on, and we don't always deal a lot with those. So there are times when Mr. Google's your friend. Especially, I was telling the ladies, the competency testing, if they keep the same test in the next few weeks, that end test, it is not divided into nice sections. They mix up the questions, and so sometimes it's quicker to Google it than look for it in your notes. So Google is your friend, and most of them are pretty accurate online. H&R Block, Liberty Tax will pull up, Intuit will pull up, the IRS sometimes will pull up when you Google, so they are a pretty valuable tool. And we use it even in the office sometimes if we forget. It's like, let's go to Google and see what Google says. So we use it a lot. Okay, chapter 4, let's go over, before we jump in there, let's go over that number 2 quiz and see how you did. Like I said, having that other office yesterday, I was able to kind of iron out some of the more tight issues they had with it. I looked over here because I know there was some stuff I had to go back there and look at. Over here. Okay, Samantha, we'll just start with you with number 1. If you'll read the question and the answer that you got.
The support test to be a qualifying relative. A, the person must not have provided more than half of his or her own support.
I have the same answer.
Support test for qualifying relative. I want to say it was B. You must have provided more than half the dependent support.
It was kind of tricky because
right, and that's what we talked about. Is they sound very similar, and so there will be some like that on the test that sound similar, and that sometimes we even after the test we're like, that wasn't right. Yes, ma'am.
Wouldn't technically both of them be?
Yeah, and I think they're just tricking you there. I don't know why they do it. I don't write the test, but that's what we talked about yesterday.
It could be both of them.
Well, what we say every year is, this is so much harder than actually doing a return. The test is so much harder, and even just the information, the way they lay it out, is so much more difficult than doing an actual return. Just want to make sure we're recording. Yeah, it is big.
Okay.
Okay, number 2. You want to take number 2 for us?
Okay. It said a qualifying child must have the same principal residence taxpayer for more than half the tax year.
Okay, did everybody get B?
B.
Yep. All right, let's do number 3, Sheila.
Which one of the following individuals meets the gross income test for qualifying relative in 2018? I got D.
Which one did you get?
D, taxpayer's 19-year-old child who is not a student.
That's what I got.
I want to say that is correct.
That's the one I got.
Because that one was a really tough one, and it had to do with the income levels. And that's another imperfect science when we're testing. So the way we have to test and teach these courses is in reverse, because we're looking at the year or 2 information before. And as you know, numbers can change every year. Specifically, that one used to go off something called the exemption amount, but the exemption amount doesn't actually exist anymore, because you don't really get a dependent exemption anymore. You get a different type of credit, and so used to, that's what they would use for income purposes. So if they have a new one next year, they will tell us what that income limit is. It will be in the software, but for the purpose of testing and like doing this, they should go off of 2018 numbers. Unless I find out differently, I'll tell you. So if you're ever looking those up, I would go off tax year 2018. I want to say Cindy said some of her questions specifically said 17. but I will get that clarification for you. She's taking the 2 tests, so it may still be 2 years old, like I said, but y'all's may be updated. So I'll find out before you take the final test. That way you know. Let's see, but yeah, on number 3, it just has to do with the income.
Okay, it's not.
Yeah, it has to do with the income.
Okay.
And usually, if you think about it, a lot of the quizzes and even the competency exam will be set up where they're very similar, like we were talking about. So usually it's in the fine print, as we say, or it's the income. It's the one variable that's different, usually, is what it is. So in reality, when you're trying to decide who's a qualifying relative, who's a dependent, it's so much more cut and dry normally. In the software, even the new software, there'll be help tools. So if you're not sure, you can click on it and look through the questions and kind of ask if you need to with the client. Most of the time with the children, it's pretty cut and dry. They're either with them in here or they have their information they've brought in. Usually the few things, I know you guys have heard me say this, I question more if they're trying to claim an adult that lives in the house or someone that's not their child, or if someone young comes in and I'm not sure if they're supposed to claim themselves. Those are more the ones we would, kind of lean more with a fine-tooth comb with, okay? Let's see, number 4. Gustavo, you go ahead.
Which of the following relatives do not have to live with the taxpayer to be considered a qualifying person for head of household filing status? I wasn't sure about this one. I only have a question mark, but I'll go with mother, even though I feel like most of those are right.
I got
Mother. Mother's right. The only ones that do not have to live with you are children and mother and father. Yes, that's right. And if you think about it, that makes sense because an older family member might be taking care of their parent, so they could still claim them because they're taking care of them, but they may not live with them. They may be in a home, they may be living in a retirement community, but that child's paying for, so that's why they're able to do head of household or claim them. And
I'm guessing more like an immediate relative, like a mother, child, and
yes,
father.
immediate. Yep. And I want to say also the rule too, and sometimes it pops up, cousin has a special rule. I think they're the one that has to live with you the full year. If y'all remember that, I think we talked about that. Cousin, every now and then that's thrown in on that exam too. And it's good to remember too, just when claiming people, when people come in, to know that, okay, mother and child are those kind of giveaways that they can, they don't have to live with you. Now, a caveat to that as far as when we're doing a return, the old software, you still had to mark 12 months. So no matter what the situation, even if they didn't live with them 12 months, the software, you just still had to mark it as 12 for it to rack up the credits like it's supposed to. And that's just saying legally it's 12 months even if physically it wasn't. Does that make sense? We have to think of it as 12 months for software purposes. Okay? I know it's kind of muddy, but you'll understand once you get in the software. And we'll know too once we get in there, we'll see how the new software is, how we have to actually mark it. Okay, number 5. Are we back up to you, Samantha?
The 5 tests for qualifying child are, I picked C, relationship, age, residency, support, joint return.
Yes. Very good. Okay, you want to do number 6? 6 is tricky.
Okay, you cannot claim a child as a dependent who selected D, who was stillborn.
That's right. Was stillborn. Okay. Main reason being that they did not live in this year. Yeah. You can only claim someone who was born alive, which is I've never had anybody come in like that, but I can't imagine having to deal with that return. Would probably be pretty tough. It is tough also to deal with returns, that have deceased family members as well. So that's one of those that would be tough. Okay, number 7.
The 4 tests for qualifying relative are, I got C, not a qualifying child, relationship, gross income, and support.
Okay. What'd you get, Gustavo?
I got B or C.
Okay.
I don't know which. I didn't know which one to pick.
Yeah, I'm gonna look it up again. What did you get on that
I
one?
picked C.
Okay, I want to say it's C, but I'm gonna look at my little book because there was a few that I had to double check in my Beeble, my little wannabe Beeble. I had to go back and forth and double check
It's
it
on your
yesterday.
little pamphlet you gave us.
So, yeah, some of them they looked on the handouts, and then there was one that we couldn't find that was just a summary page coming up in a minute, and so I had to look that one up too. Which was that one? I should have took these down while we were in class, but I didn't. Not a qualifying child, relationship, gross income, support test, and is there any we didn't name?
Yep, that was it. So C.
Yep, see, that's what I thought. Let's see. Okay, and who was next? Gustavo, are
was.
you next? Okay.
Yeah, a child cannot be your qualifying relative if they are a qualifying child of another taxpayer. A child is not considered to be a qualifying child of any other taxpayer if, this one I was blank too.
Yeah,
Wasn't
they
sure.
had trouble with this one over there too.
My guess would be E, but I'm not really sure.
Yep, you're right. Yep. And so let's think about this. So a child cannot be your relative if they're a qualified child of another taxpayer. But a child is not considered to be your qualifying child if, okay, child parent is not required to file a return and does not file. Child's parent files a return only to obtain a refund. Both of those things mean something. That means those parents didn't support themselves. So if they didn't support themselves, they can't have a dependent. Does that make sense?
It does make sense.
That's what that's saying. It's very wordy, but that's what they're trying to say. So if you think about child's parents not required to file, that's because they didn't make enough money. So if you don't have a filing requirement, you can't claim a dependent. Well, you can, but for all intents and purposes, you can claim a dependent. But it's a weird rule because we don't see this a lot. They're saying it's not your qualifying person, so it could be for someone else because they're taking care of them, you're not. But it's kind of come at a weird way, okay? This is almost like you're releasing them that someone else could claim them because you can't because you didn't take care of them in the eyes of the law. So this situation, remember I was telling you about like with the joint return, like if you had a couple that maybe had lost their jobs and they have a kiddo and they're living with grandma. Grandma works, grandma could claim all of them because almost like the married rule, like that you could claim a married couple because they were filing just to get back what they paid in because they don't have a filing requirement. So C and D are very similar, okay? You don't have a filing requirement according to that chart. Remember there was a chart seen from chapter 1 that shows you like income levels. So they didn't meet the requirement there, okay? And they're filing only to obtain what they paid in, so they don't owe anything in because they didn't have the requirement. So it's a very similar, they're saying kind of the same thing there, but it's in relation to, this is what I don't like about it, it's in relation to the fact of, are they able to claim that child? You know, and if they can't claim that child, what is the way someone else could claim them, okay? You can't just decide not to claim them. That's not the way it works. And if you're required to file a return, they're going to be on your tax return, right? Because if you're required to, you made enough, so they need to be on your tax return. Does that make sense? Okay. Number 9 is also a little bit tricky. Like I said, some of these in this quiz, you won't even see them in reality filing returns. They just want you to know the rules just in case, okay? Which of the following is not one of the tiebreaker rules? Whose turn was it? Samantha, was your turn? Okay.
If it's C, if a parent can claim the child as a qualifying child, but no parent does claim the child is treated as a qualifying child of the person who had the highest AGI, as long as their AGI is lower than the parent's AGI.
Okay. We thought it would be B because when you file a joint return, you don't have a tiebreaker rule. Does it make sense? Because B says if the parents file a joint return and can claim the child is treated as the qualifying child of the parents. And it says which one is not a tiebreaker. Well, you don't need a tiebreaker if you're filing a joint return.
Right.
And so that one even tricked me. I looked at that question, and I looked at that question, and we talked about it for like 15 minutes. And I'm like, and finally I said, you know what, Frank? I think you're right because they don't need a tiebreaker if they're married. And that's the type of questions we're talking about, that in reality, if you just said, what are the tiebreaker rules, you'd get it. But when you look at it in a question, it's like way word overload. So I wish they didn't do things like this, but they do. Now, they're not all going to be like this, okay? But some of them will be. So you have to kind of think of it differently when you're reading the questions. I don't want to say you actually need to be looking for tricks, but sometimes you do. If it sounds odd, there could be a trick in there, okay? So, especially when it's got those words in big that says not, that's where you have to kind of think through of what are they looking for exactly. Number 10 is another one of those that it's one of those things. We went through the slide, but I didn't focus on it. And then when it came up here, I thought, oop, that's a very general question. Because everybody gets to the nitty-gritty of qualifying relative, qualifying child. But number 10 is just, what's the rules about claiming a dependent? Okay? And the way I explained it is, on number 10, this is just the general rules. From your general rules is where you break down to the types of dependents. Okay? So what did you guys get on number 10?
C.
I got C.
You had C. Okay, and I had to look this one up.
I think, yeah.
What did you pick?
C.
Let's see what I put here. I don't know why I didn't mark these down yesterday. I guess I was just brain dead or something when we were going through them. Probably. So, let's see. Go write me a note that I left it over there. Let's see. Because it is in my goodies here. This is like my Beeble of text stuff. Okay. Rules for claiming a defendant. So the question is, which is not one of the rules? So the rules are dependent test, joint return, and citizen. So support. Support. Okay? Support is the one. And the reason being that I have a hard time remembering it is we don't talk about it every day. Just because we go straight to, are you a child or are you a relative? And then we deduct from there. We do it backwards when we're actually doing returns. So, the three general rules are dependent test, joint test, citizen test. Citizen test sounds simple, right? They're a citizen or they're not. Joint return means you can only claim somebody that does a joint return if they didn't support themselves, right? We went over that a minute ago. We don't see that very often, but they put that in there as one of the main headers, right? Got to be a citizen. You can file that joint return, but it can only be to get your money back, or we have to have supported you. Dependent test literally means I cannot claim a dependent if I'm a dependent, and the person filing a joint return and their spouse can be claimed as a dependent of someone else, but they can't claim dependents. So that's literally when it says dependent test, that means am I a dependent? Does that make sense? Because you can't be a dependent and claim someone else. And that doesn't come up a lot. Like I said, I ask it when they walk in the door, but for me to tell you on the test, I was like, what? General rule? That's a weird thing. But those are the three general rules. And then we break down to the types of dependents from there. So that's kind of like your header. Do you fit in this class? Okay. You know, but like I said in here, they just write it down on their sheet. And then we ask them backwards, well, let's see if they qualify. We don't even hardly think about those because if they're under 18, they didn't support themselves, they're not a joint return, all we really have to think about is if they're a citizen, right? Because they're under 18. And I think that's why a lot of times I don't even think about the general rules, is because a lot of them it doesn't apply, right? So that's why that one's a little tricky. But for the competency exam, you'll know now that its support test isn't one of the main three rules for claiming dependents. Okay? Yeah, so that will be similar to how some of the questions are. Some of them will be a little more straightforward. Some of them will be a little more tricky and in the wording and that sort of thing. I need to go ahead and set my timer. And that way I know when I've reached my time to possibly check my clock over there for recording. So, okay. So when this dings, we'll take a break and I'll be able to check the camera. All right, we're going to do a little more review. That's what you guys like to do, more review.
Oh, yeah.
We're going to review filing status. Okay. We'll do quite a few of these real quick, and that way you guys will probably have a pretty good handle on this. John and Stella are married and live together. Both are employed. John is very independent and will not file a joint return with Stella. Which of those would they then have to file if he doesn't want to do married filing joint?
Married filing single.
Married filing single. Yes. Do we want him to do married filing
No.
single? No. So we would try to talk him out of it or see what the reasons would be of why he'd want to do something like that. Matthew is unmarried and lives alone. Matthew pays over half the cost of keeping up his father in a home for the elderly and claims him as a dependent. Which one of these filing statuses could he do?
The household?
Head of household, see?
Head of household, very good. Because your parent or child you're taking care of, even though they're not in the home, you can still do head of household. Reed is 20 years old and unmarried. She lives with her boyfriend, Allie, who's a full-time student and does not work. She works at the campus bookstore and provides all the cost of maintaining the home. Trickery, I say. Single.
Single,
Is it
yeah.
making it-
Single.
Is it making it red up there? Thought it was. There we go. Single.
Oh, single.
Yes, because they're not legally or biologically related.
No.
Okay? For HOH purposes, and you'll learn more about this too when we get to some of the tax credits because they really focus on it there. The biggest thing to remember on HOH, you have to be legally or biologically related for HOH. Okay? Now, can you be single and claim someone as a dependent? Yes. But you cannot be HOH unless they're legally or biologically related. So every time you read this, when we're talking about filing status, automatically be thinking, are they legally or biologically related? Then you're single. That literally is the key there.
I think it said right there, I don't know where it said it, that he was a full-time student, he doesn't work, right?
Right.
So
So
she could claim
she
that
could
as a
claim the
dependent.
dependent exemption, yes, but her filing status would still have to be single. And it took me a few years to really understand that you could be single and still claim someone as a dependent. You just can't do the higher HOH, which gets you more back, basically. And we'll learn more about those credits in the next few chapters. Okay, Ken is a stockbroker. He divorced his spouse, Phyllis, on December 30th, 2018. Their 2 children live with Phyllis. She pays the cost of keeping up their home. What is Ken's filing status?
E? Oh.
Married filing.
They were
She's
divorced on December
So,
30th.
S.
Okay? Yes. Yes.
Single.
So Ken, the
yeah.
husband, that's one of those trick ones. If you're thinking about it, you'd think they'd ask about her because they talked about her, but they ask about Ken. So she's going to be able to do HOH because she's got the kids. He ain't got nothing, so he's doing single.
See, what throws me off is when they talk about, oh, they live with him. and
Right,
I'm like,
and they will do that. I will say a lot of those, usually it's in the first few sentences, okay?
Oh,
Because there
okay.
there will be some like that on your test, okay? Karen is divorced and was providing the cost of raising her daughter until her daughter died suddenly in January. Karen maintained the home during the period her daughter was alive. HOH, okay? Because if you're alive one day, you're considered to be alive the whole year, right?
Right.
So you gain any benefit that you would get from that whole year status, which would be HOH. Okay? David pays the full cost of the home in which he and his 23-year-old daughter live. She's not a full-time student. His daughter earns $41.50 and does not qualify as his dependent. So they're telling you she's not his dependent. His wife died in 16. This is 2 years later. It's not a
Single.
current year.
Single. Yeah.
D.
Yep. D.
Is it being read up there?
No.
There we go. Single. Yes, correct. They started to kind of get confused yesterday with the qualifying widow with dependent child, which I don't know why they don't put that there. It's supposed to be with dependent child. But she does not qualify for that because she's not in school. So she's in that spot where probably doesn't make enough to take care of herself, but he really isn't supposed to claim her as dependent. So he's kind of left with higher tax burden there now. Shiloh is unmarried and lived all year with her boyfriend, Sweeney Todd, and Sweeney's 10-year-old son, Johnny. Sweeney does not know how to locate Johnny's mother. Okay? Sweeney was a bouncer on $5,000. He will file a return only to give withholding back. Shiloh's a lawyer and provides over half the support. Shiloh meets the test to claim Johnny as a qualifying relative. And they're talking about here qualifying relative for your household. Okay? That's fine and good, right? qualifying relative for the house. That's great. I help take care of them. But are we legally and biologically related?
No.
No.
Single.
Single.
My computer will like me. Now, can we take the dependent exemptions? Yes. But only single. And I will tell you, our old software sometimes had trouble with this if someone single wanted to take the dependent exemptions. So we'll see if the new software is a little better with it.
The names are cracking you.
Oh, yes. And I'm sure they kept those on old stuff, too.
Oh.
Oh, we have some interesting ones on practice problems, too. Peter's divorce became final in August. He has sole custody of his boys. The children are both under 19. He provided more than half of the cost of keeping up the home. That one was, that's one of the straightforward ones. It's like, am I reading it right? Where's the trick? Okay, head of household. So this gets easier as they give you scenarios throughout. As we get into practice problems and do some of those through the testing through our 12 chapters, we'll still do some scenarios like this. I'll see towards the end how in-depth they have us get into actually preparing returns. Our old training, we used to prepare returns by now, but they really want us to focus more on things like this than us actually preparing a return by the end of the class. So when I say class, I mean end of training.
Quick question. So it doesn't matter when he got divorced, as long as he's divorced in that year?
Correct. Yes.
Okay.
Yes. And now, it's a good question you're asking because that brings up, and we'll go over that more in another chapter. There is one of those things if you're not married, but you have children, if you're married and have children and you're not divorced yet, there is something called considered being unmarried. We touched on it a couple of trainings ago, and that's what you're remembering. Basically, if you're not together those last 6 months and you had the kiddos and it was your house and you paid for the house, you can be considered unmarried and do HOH, but you have to have dependents, okay? Can't be considered unmarried if it's just you and the spouse, okay? Have to have dependents that you're taking care of. You had the house, you paid for the house, that sort of thing. If both of your names were on the house, it becomes a little more of a tricky issue, okay? Because then it's like who was really paying the bills. But we can only do the best complete return we can by talking with the client. So we really only know what they tell us, okay? That's for documenting their answers. If it's one of those returns where we have to have extra documentation, the system will tell you that, and it will have you ask the questions, okay? All right. Any questions about filing status in general? No? Okay. So today we are going to talk about wages, tips, self-employment. Where did my water go? There it is. Quite a few things shoved into this chapter. It's a pretty lengthy chapter. We only got about 70 to 80% of the way through yesterday, but that's okay because it's definitely some good information. Most of you guys that are in these 2 trainings have had jobs before, so you're going to know some of this information. So some of this may go quicker than it normally would. Taxable income, we've got earned and unearned. And so this just shows us wages and self-employment are earned, money, investments, interest, things like that are unearned. That just means you went out and worked for it that week or 2 versus it's in the bank, it's growing, it's your nest egg. That's unearned. That will be important later on. If you can't see these on your slides printed out, go ahead and write those beside it. This is non-taxable income. You will definitely have questions on your competency about taxable versus non-taxable. And if you're like me, you forget and you can't find it and you still have to Google it. But we also get these questions every day. People call, come in. This is a big, big question I always ask. Non-taxable, child support, federal tax refunds, interest on bonds, public assistance payments, workers' compensation, most life insurance proceeds, and a portion, sometimes, of Social Security benefits. Do you have any specific questions about any of these or what they are? Okay. Portion of Social Security, somebody asked me, what does that mean? Well, what it means is when it comes to Social Security and the elderly or people on disability, sometimes a part of that can be taxed. There's a formula, and usually I tell people, we don't usually do things by hand anymore, so we just put it in the system to see the formula. But there is a formula on the back of their Social Security paperwork that if someone wanted to do it by hand, they could go through and determine what their benefit would be on the back of their Social Security paperwork. Okay, it's on like their little printout, their 1099. I want to say it's like if they're married, they do half their income versus half their taxable income if they're also working versus like half of their income. And I want to say they can make like $32,000 if they're married, something like that. But that'll probably come up later on. If it doesn't, and there's more questions, I'll show you one. That way you can kind of at least see it. But just remember that we do get older clients that are over 60 that'll come in and they've been still working. And they're drawing money over here, and people have that misconception that the government won't touch it, and that's not true. And when they find out that's not true, they get really mad, because even with some retirement things, when you hit certain ages, you have to start drawing it out, even if you don't want to. And so you're drawing it out, you're taxed on it. So it can kind of become, if you get some of those, which is great if you've prepared your whole life, but then you hit 65 and 70 and then you're not taxed on everything again, they're not happy about that. So we have to just say, don't hurt the messenger, please. Life insurance proceeds, most of those aren't taxed. Usually it says most because IRAs or any kind of retirement type things that are willed to someone can be taxed. So you have to be careful if you ever get a phone call or even in your own little circle if someone says, oh, I'm getting a retirement plan or I'm getting this from someone else who was deceased. A lot of times IRAs, pensions, those sort of things can be taxed. We're talking about an actual life insurance proceed. Okay, this was a life insurance policy. It's got willed to somebody. That's what we're talking about. Sometimes property can be taxed as well. So that's why this kind of puts that most in there. Workers' comp is when you get hurt.